Alright, so let's talk about AI. Artificial intelligence. It's here, it's real, and it's got its digital eyes set on something big: money. Global finance has been getting an AI makeover for a while now. Banks, stock markets, investment firms, they're all buzzing about AI. Now you might be thinking, okay, market formula, that's cool for Wall Street, but what about us here in Nigeria? And that's a great question. This AI wave, it's not just lapping at distant shores. It's starting to make some serious splashes right here in Lagos, Abuja, and beyond. Nigeria's financial market, a place already known for its hustle and innovation, is beginning to feel the AI effect. Think about it. Nigeria is a powerhouse of talent and tech savviness. We've embraced mobile money like nobody's business. So, it only makes sense that AI would find fertile ground here. The potential is huge. We're talking about making financial services smarter, faster, and maybe even a little bit fairer. Of course, it's not all smooth sailing. There are challenges, questions, and probably a few moments where we'll all scratch our heads and say, wait, how does that work again? The AI revolution in finance is knocking on Nigeria's door, and it looks like we're ready to answer. So, how exactly is AI changing the money game? Let's start with trading. You know, buying and selling stocks, bonds, all that stuff that sounds complicated. Well, AI is making it even more interesting. First up, we have algorithmic trading. Fancy term, right? It basically means using computer programs, super smart AI programs, to make trading decisions. These algorithms can analyze massive amounts of data, market trends, news reports, even social media chatter, way faster than any human ever could. It's like having a financial genius who never sleeps, never gets emotional, and can do math at lightning speed. Then there's high-frequency trading, or HFT. This is algorithmic trading on steroids. These AI systems make trades in fractions of a second. Blink, and you've missed a dozen transactions. It's all about speed, exploiting tiny price differences that humans wouldn't even notice. This kind of speed can make markets more efficient, they say, by quickly matching buyers and sellers. And it's not just about speed and raw data. AI is also getting good at sentiment analysis. This is where it tries to figure out the mood of the market. Is everyone feeling optimistic and ready to buy? Or are they scared and looking to sell? AI does this by scanning news articles, social media posts, even financial reports, looking for keywords and tones that suggest positive or negative feelings. It's like having a digital mind reader for the entire economy. Now, making money is great, but keeping it safe is just as important, right? This is where AI steps in as a kind of digital detective, working tirelessly in risk management. One of its biggest jobs is fraud detection. AI systems can analyze transaction patterns, user behavior, and other data points in real time to spot suspicious activity. It's like having a security guard who can watch millions of transactions at once and instantly flag anything that looks fishy. This is super important for Nigerian banks and financial institutions. As more transactions go digital, the opportunities for online fraud unfortunately increase. AI can learn what normal behavior looks like for a customer and then raise an alert if something deviates from that pattern, like a sudden large withdrawal from an unusual location. It's not just about catching fraud after it happens, it's about preventing it in the first place. This helps protect both the customer's money and the bank's reputation. Think of it as a super smart bouncer for your bank account, checking IDs and making sure only the right people get in. Another area where AI is a big help is in credit assessments. One of the most exciting things about AI in finance is its potential for financial inclusion. What's that, you ask? It's basically making sure everyone, no matter who they are or where they live, has access to useful and affordable financial products and services. Think about it. For a long time, banking felt like an exclusive club, especially for people in rural areas or those with lower incomes. AI is helping to change that narrative, particularly in a country like Nigeria with its diverse population and vast geography. It's about bringing banking to the people, instead of always making people go to the bank. Mobile banking is a huge part of this. We all know how much Nigerians love their phones. AI is making mobile banking apps smarter and more user-friendly. Imagine an app that doesn't just show you your balance, but also understands your spending habits and offers helpful tips. AI-powered chatbots can provide 24/7 customer service, answering common questions and guiding users through transactions, all in simple language. This is incredibly valuable for people who might not be able to visit a physical bank branch during working hours or who feel intimidated by traditional banking processes. Then there's personalized financial advice. Okay, so AI in finance sounds pretty amazing, right? Faster trading, better security, more people getting bank accounts? It's like we found a magic wand for all our money problems. But hold on a second. Before we all start singing Kumbaya with our robot bank tellers, we need to talk about the challenges and ethical considerations. Because with great power, as they say, comes great responsibility. And potentially some really big oops moments if we're not careful. This new tech is powerful, no doubt, but it's not perfect. First up, data privacy. This is a big one. AI systems, especially in finance, thrive on data. Your transaction history, your spending habits, your personal information, all of it gets fed into these algorithms. Now, the idea is that this data helps the AI serve you better. But what happens if that data gets into the wrong hands? So, we've got this powerful AI technology transforming finance, but we've also got these tricky challenges like data privacy and bias. It's like giving a teenager the keys to a sports car. Sure, it's exciting, but you also want to make sure they know the rules of the road, right? That's where the regulatory landscape comes in. As AI becomes more embedded in Nigeria's financial market, we need clear guidelines and oversight to make sure it's used responsibly and ethically. We don't want a financial system run by rogue algorithms, that's for sure. The thing about technology, especially AI, is that it moves fast, really fast, faster than regulators can often keep up. So, the rulebook for AI in finance is still being written, not just in Nigeria, but globally. Governments and financial authorities are grappling with questions like, who is responsible if an AI makes a bad investment decision? How do we ensure AI algorithms are transparent and explainable, not just black boxes? So we've seen the good, the bad, and the potentially confusing bits of AI in Nigeria's financial market. It's clear that AI isn't just some passing fad. It's a powerful force that's here to stay and reshape how we handle our money. From super-fast trading bots to smarter loan applications and banking apps that actually talk to you, the potential is immense. But, as we've also discussed, it comes with its own set of homework. Things like data privacy, avoiding bias, and making sure everyone gets a fair shot at benefiting from these new tools. This isn't a spectator sport, people. Making AI work for Nigeria, truly work for all Nigerians, requires a team effort. It's not just up to the tech gurus or the big banks. It needs collaboration. Financial institutions, the ones rolling out these AI systems, need to be responsible and transparent. They need to think about the ethical implications of their algorithms and prioritize customer trust. They also need to invest in the skills and infrastructure to use AI effectively and securely. It's like building a fantastic new stadium. You also need trained players and clear rules for the game. Then you've got the regulators, like the CBN and SEC. Their role is critical. They need to be agile, creating smart regulations that protect consumers and ensure financial stability without strangling innovation.